In this video, I'm going to teach you how S Corp taxes work, right? So if you have your business taxed as an S Corporation, by the time you're finished watching this video, you're going to understand exactly what taxes, what are your obligations that you have to pay as an S Corp tax owner. What I'm going to do is I'm actually going to take you through not just a spreadsheet of what the taxes are, but I'm going to take you through the actual tax form so that you can see them yourselves. The 1120S document that you're required to complete if you have an S Corp, you're going to see how you complete that and how the profit from that S Corporation flows into your individual tax return. That's Form 1040. And so you can see how the tax that you owe is calculated. Remember, an S Corporation tax return is a pass-through entity. So it itself does not pay any income tax. It's you, the individual, the shareholder employee that has to pay the income tax on the profit that your S Corp earns. And let me just tell you that this video is part of a greater series where I'm teaching you how taxes work for sole proprietorships, single member LLCs, S corporations, partnerships, multi-member LLCs, and corporations. So if you don't get your question answered here, check out the other videos in this series. But let's jump right into it. Here's a spreadsheet that I created that just kind of goes over a high-level overview of the taxes that you have to pay regardless of your tax classification. So I've got sole proprietorship up here, S Corp, partnership, and C Corp. You heard me mention single member LLC and multi-member LLC. In general, a single member LLC is taxed as a sole proprietorship and a multi-member LLC is taxed as a partnership. So that's why I have those items listed here as well. But in this video, we're focusing on the S Corporation. Like I said, check out the other videos in the series if you want to learn about the sole proprietorship, the partnership, and the C Corporation. This one's going to be focusing on the S Corporation. So I'm going to take you through this, and then I'm going to show you the tax forms. All I'm saying here is that you had $125,000 in business revenue. These were your sales, okay? You sold this amount of product or you offered this amount of services and your customers paid you this money. You had expenses of $28,060. I know that sounds like a weird amount. I'm gonna explain why $28,060 in a moment, but here's a little bit of a spoiler, okay? $25,000 is advertising expense in my example, and $3,060 is the taxes the S Corp has to pay, but they're not income tax. Remember, S corporations don't pay income tax. It's FICA taxes, Social Security and Medicare. I'll show you how that works in a second. So your business profit will be $96,940. You have to pay yourself reasonable compensation. You typically do that through payroll, and you're going to be paying some payroll related taxes. So let's say your name is John, okay? So John, the business owner, has decided that his reasonable compensation for the services he performs for his S corporation is $40,000. What taxes does he have to pay on the $40,000? Well, he has to pay FICA taxes. That's Social Security and Medicare. He has to pay this for as John, the employee. Okay, this is 6.2%. 40 grand times 6.2% is this number here. And then he has to pay Medicare tax on this number. So this is 1.45%. Okay, so 40 grand times 6.2, 40 grand times 1.45 is this number here. Now, John's S Corporation also has to pay these FICA taxes. Again, that's Social Security and Medicare at the same rates, okay? So John's S Corp is paying the employer portion of those taxes. Same amounts, same percentages. So the total of that is $6,120, okay? So that's how much he's paying himself in reasonable compensation, which leaves a remaining profit of $56,940. So he's paying $6,120 in Social Security and Medicare taxes. By the way, this is a savings of over $8,000 when you compare it to the sole proprietorship. Not going to go into that here, but just wanted to highlight that real quick. His federal income tax. We just covered the FICA taxes of $6,120. The federal income tax he has to pay is $11,087. Again, I'm going to show you all of this on the tax return. Total taxes, $17,207 for an effective tax rate. You know, you made $96,940 in profit. You had to pay $17,207. That's an effective tax rate of 17.75%, which, by the way, is much better than the sole proprietorship at 23.36%. Okay, let's transition to the tax return, and I'll explain how that works here on the actual tax forms. Before I do that, though, You've been listening to me thus far. I haven't introduced myself. My name is Navi Maraj. I'm a CPA that helps entrepreneurs like you save thousands of dollars in taxes. I do that, and I'm doing that right here in this video by showing you how these taxes work with these various tax classifications. But I also do it in a much more detailed and easy to understand manner through a course. You can find the details of that course on my website, which is navimarajcpa.com, or down in the description below, depending on where you're watching this video. But in that course, essentially what it's designed to do is take you from knowing nothing about bookkeeping and how all this stuff works, and I actually convert you, transform you into a tax-savvy entrepreneur who implements strategies on your very own. You won't even need a CPA like me, and you'll save thousands of dollars in taxes each and every year, okay? But let's get back to the topic of this video, which is how S Corp taxes work. So here we have the 1120S. This is the tax document that you have to complete at the end of the year for your income that you've earned through your S Corporation. Now, this is considered a pass-through entity. What do I mean by that? That means it's also called an informational tax return. We have to send this to the IRS by March 15th, okay? Notice I said March 15th, not April 15th. Or we can file an extension for 6 months and file this by September 15th. We're just giving the IRS this information. You'll notice here that no tax is due with this return. If you look at this line here, no tax is due with this return. But we do have to tell the IRS how much money we earned. So when this information gets flowed into our individual tax return, that's where the taxes are calculated, and that's how much you're gonna have to pay. Let me break that down for you, okay? This information up here, not super important for the purpose of this video. I'm just saying, hey, you started this S Corporation on 1/1/2023. This is your business name. These are your total assets. This is the date you incorporated the business. This is your made up, well, you'll have your real EIN number. This is a made up EIN number. But basically where it starts to get interesting is here. These are your gross receipts. So in this example, I'm saying you're a realtor. So you make $125,000 in commissions, okay? That's the money that the broker paid you, $125,000. Your reasonable compensation that you have to pay yourself, okay, when you're an S Corporation is $40,000. This is just what made sense for this sample individual entrepreneur. This is not a fixed number. It's different for everyone. It depends on the services that you're providing to your S Corporation. Taxes and licenses, $3,060. Where is this number coming from? If you were paying attention earlier, this $3,060 is what the S Corporation had to pay John as the employer portion of Social Security and Medicare taxes. If you add these two numbers together, the sum is $3,060, okay? So that's where that number is coming from. Then I was just being very generic here. I'm saying you have $25,000 in advertising expenses. If you're a realtor watching this, you know that that's pretty conservative, right? You spend most of your dollars on advertising. But in reality, if you're not a realtor, or even if you are a realtor, you've got other expenses, right? You've got legal and tax fees and professional fees, home office, cell phone, internet, all these strategies that I teach you in my course. You might have a solo 401k. You might have an HSA, all these various things where you might get a deduction for. Some of those items I mentioned would not show up here, but they do show up on your Form 1040 tax return. Anyway, your total deductions, if you add up the $40,000, which is the amount you paid yourself, the $3,060, which is the employer portion of the FICA taxes on this 40 grand, that's 7.65%. If you want to recompute that math for yourself, 7.65% of 40 grand is $3,060. And then we have $25,000 in advertising expenses. So our total deductions, if we add lines 7, 12, and 16, is $68,060. Leaving us with business income, that's on line 22 here, of $56,940. Like I said a moment ago, you do not have to pay any tax. Line 26, amount owed, $0. We don't have to pay any tax at the S Corp level. Now, I created a video like this a couple years ago, and some of you wanted me to go into a little bit more detail, so I'll do that, okay? I don't want to go in too far into the weeds. Page 2, you could just read it. It's not very complicated. They're yes or no questions. Page 3 is Schedule K here. Okay, this is showing you the shareholders' pro rata share items. Now we only have one shareholder in this example, So this would be the gross amount of business income that the S Corp earned. And then if you had multiple shareholders, this number, 56,940, would be split into two if you had two shareholders. But this is the gross amount. So the total business income would show up here, okay? We also had some distributions. What I mean by this is the profit that you had in your business. Let me go back up to page 1 for a moment. The 56,940, you needed that money. You needed that money to pay your mortgage and your bills and your car payment and for your kids' expenses and all that stuff. So you took that money out of your business, out of your S corporation, and you took that money out as what's called a distribution. So you pay yourself payroll, that reasonable compensation, you pay your Social Security and Medicare taxes, aka FICA taxes on that amount. But this 56,940, it's not subject to FICA taxes. You only pay income tax here. I know it's a little bit confusing. I'm going to show you this when we go over to the 1040 individual tax return. Okay, this is the balance sheet. Very oversimplified balance sheet. Your balance sheet might be blank. If your balance sheet is blank, in my opinion, that means that your tax preparer doesn't know what they're doing. And they may not be balancing your balance sheet or paying attention to these numbers, okay? This is an oversimplified example. You'll notice here, the cash is $10,000. Where's that $10,000 coming from? I'm just saying that you invested $10,000 into this business, right? You earned your revenue, you had your profit, you pulled all that profit out. The $40,000 was paid to you via salary, and the remaining dollars, I believe that was like 56,940, was paid to you through a distribution. So you pulled all that profit out, but you still have the $10,000 you originally invested into the company sitting there as cash at the end of the year. When you made that $10,000 deposit, this is just how your accountant classified that. $1,000 went into the equity account called capital stock. The additional $9,000 went into another equity account called additional paid-in capital. Your tax preparer might do this differently. That's fine. Retained earnings, what do you think that number would be? Well, here's a spoiler. It's zero. You didn't retain any of the earnings because you pulled them all out in distributions, which is what this screen here shows you. Schedule M2. Again, I know I'm getting into the weeds here. This was a brand new business. You started out with $0 in what's called the accumulated adjustments account. You earned 56,940, and then you took a distribution of 56,940. So you basically stripped out all of the accumulated earnings that there were out of the business. Okay, so that's Schedule M2 and how that works. Okay, those are the major sections of the 1120S tax return. What will happen though is the shareholder, the owner of the business, will receive this form called a Schedule K1. And the Schedule K1 flows into your individual tax return. And this is how the IRS determines how much tax you owe. Let's have a look at that now. I think I've gone into the details here, into the weeds a bit of the S Corp tax return. Let me show you the individual tax return for this business owner. Okay, so here we are. We've got Form 1040. This is for the 2023 tax year. Sample individual. This is his address. This is the made up Social Security number. Now on this, I know I scrolled down pretty quickly. This is basic information up here. Here's where the juice is, right? Line 1A, W2, how much did you earn? $40,000. Again, this was your reasonable compensation amount that you paid yourself. $40,000. What other income items did you have? In my example here, I'm saying the only income that you had is from your S corporation. So the only income was the 40 grand that you paid yourself, and then the 56,940. You know where that number is coming from, right? That's the remaining profit in your business after expenses that you took as a distribution. This is the 56,940 of income. This is the Schedule K1 on the 1120S. This is the remaining profit that you took as a distribution. Okay, so the total of those numbers is $96,940. Okay, this is our total income. Now, we don't have any adjustments to income here. If you look at the sole proprietorship example, there was an adjustment to income for half of the self-employment taxes you paid. Not the case here. So then what happens? You get the standard deduction. The standard deduction when 2023 was $13,850. It's typically adjusted for inflation each year. So in 2024, it will be a little bit higher. You also receive the qualified business income deduction. The math on this can be tricky. In this example, it's not that tricky, but it can be 20% of the profit in your business. So 56,940 times 20% is, I believe, the $11,388. The total of these two deductions, the standard deduction and your qualified business income deduction, was $25,238. So you take the $96,940, we subtract this, and we get $71,702 of taxable income. Now, what taxes do we have to pay here? We have to pay income tax on the $71,702. So in our example, I'm just saying you're a single individual, you're not married, filing jointly, and this $71,702 is flowing through the various tax brackets. Here's a website from NerdWallet. I'm saying you're single, it's 2023, you made 70 something thousand dollars. So your first 11,000, you're going to pay 10% tax rate on that. 11,001 to 44,725, you're paying 12%, and then the 44,726 through the 70 something thousand, you're paying a rate of 22%. So when you add all that math together, you get $11,087. Now you might be saying to yourself, but Navi, I thought you said that you actually have to pay more tax than that. I thought you pay $17,207. Let me clarify that for you in case you're wondering how this number is being calculated. It's the $11,087 that we just went over. It's the employer portion of the FICA tax, which you saw on the S Corp return, right? Let me just quickly show you that because I don't want you to get confused, all right? So on the S Corp tax return, we have the $3,060 there. That was tax that you paid. And then we also have another tax that you can't really see here, but on your W-2, when you were receiving that $40,000 of reasonable compensation, Social Security and Medicare taxes were automatically being taken out of your paycheck at a rate of 7.65%, and that total was $3,060. So if you sum the $3,060 here, the $3,060 here, that's $6,120, plus the $11,087 in income tax, the total tax is $17,207. As I mentioned earlier, way better than the sole proprietorship, which is $23,357. So I hope this was a helpful video for you. Again, this video is just a brief overview of this stuff. I go through this in a lot more detail, a little bit slower, so you can fully understand how this works, but not only this basic stuff, the tax strategies. And that's what's the most important thing to reduce the amount of taxes that you owe. So I hope to see you either watching one of the videos in this series if you want to learn how the partnership taxes work, C Corp taxes work, or one of my other videos if you want to learn more about some of the tax strategies that I teach and show you how to implement step by step in the course. So with that said, I'll see you either in the next video within the series or in the course.